Hi everyone, good evening. My name is Peter Coutinho. I'm a product manager at Paytm Money. Today we are with Mr. Vamshi Vardhan. He's a well-known trader. Vamshi is a chartered accountant by profession. He does option selling, mainly index option selling. He's a non-directional trader, like he do straddle and strangle strategies. He's a algo trader as well. Along with equity trading, he do trading in commodities also. As of now, he's a full-time futures and options trader, or we can say like a non-directional trader. Today, we will learn Mr. Vamshivardhan's trading journey and non-directional option selling strategy. He is going to share his one of the weekly and monthly non-directional option strategy with us. I'm very super excited. Vamshi, welcome to FNOP
Hi,
Charcha.
Peter. Hi, Peter. Hi.
Yeah, and also we are with the Mr. Shankar. He is a trading expert and trainer at Paytm Money. And Manas also joined with us. He's a product manager at Paytm Money. Shankar and Manas, welcome to FNOP Charcha.
Hi everyone.
Thanks, Peter.
Hello.
Yeah.
Yeah, Vamshi,
Yeah. So,
let's
yeah.
start
I,
this Charcha. So our first question is like, how did you start your trading journey? You can explain about your trading journey, how you started.
yes, Peter. Yes. Yeah. Actually, thank you for hosting me today. Because and this is also my first space actually. That too with Paytm
Okay.
Money, I am so obliged to take a session now. So basically, I'm a chartered accountant. Okay, I'm a chartered accountant. I qualified in 2015 May. 2015 May and November, I qualified as a chartered accountant. When it comes to trading, actually, my father, okay, whenever he started investing at the times of 2006, 7, and 8, when that Satyam issue came, so those times my dad is a pure investor and he also invested in these kind of stocks like Satyam or those stocks at that time because they are trending. So I just got an interest. Okay, whenever at that time on night time, okay, whenever we watch the TV, okay, we watch the TV channel, that the scrolling of the all the stocks and all went will go. So based on that, I got little interest on investing side. Okay, how stocks will work and all. But till I completed my plus two and all, I didn't get any opportunity of the markets. Then whenever I started my CA journey, okay, in CA we will do around the 3 years of apprenticeship. And even in CA we study something about options and futures like that. We have one subject for it. So whenever I started reading it or whenever I started taking coaching for that CA things, then I came to know about proper things about options or derivatives or hedging. So many things we can learn in CA curriculum. Then I got interested. Then slowly I started because if you see anyone start trading, they will start with very small money like 5,000 or 10,000, 15,000 at the initial stages when we didn't have any income also. So I also started in the same way, like option buying and all the things, whatever every trader will do. I also tried everything, but finally I settled with option selling after almost 3 to 4 years of doing all the things. When I can say my journey in stock markets, it started from 2014. 2014 May is the first day I traded, and today is 2021 December 30. From 2014 to 2021, around 7 years, there is almost no trading day without punching an order. So from day one till now, whether it is a profit or whether it is a loss, I keep on trading and so many methods. But from 2018, after 4 years of trying everything in the market, I came to option selling. Okay, from then I slowly started making profits in last 3.5 years to 4 years. So this is how my journey in the market has started.
Great. That's
If I can
amazing.
say, yeah, if I can say more, the CA curriculum, whatever is there, that is the biggest strength in my trading career because that's where we learn so many things. And I also seen that at the time there is some options. Okay, if you see any one day, like today RBL bank has went down 10%. If you see some of the options, okay, they will show you like 3000% or 4000% returns in one option. So whenever I started coming into the trading, I also kept in only in my mind that at least one day I should make the 2000 or 3000% return, so my life will get settled. That's how we came into market. And whatever the money I am getting, like 10,000, 15,000, any money, I kept on going and I buy some OTM options to assume that whether it will go from 1 to 100 or 1 to 200, like that. We lost so much of small monies. But when we came into reality, the probability of getting those kind of return is negligible, is almost negligible in my opinion. And it's almost about luck. But we study in CA, we study more of probabilities and the discipline. So here when I see the probability of success in option selling is little bit of higher than comparing all other objects. Okay, so that is why I am into mostly about option selling.
Vamsi, I would like to take you back in your career. This is a question which I'm asking you as a person who has passed chartered accountancy. See, people who
Okay.
are chartered accountants, as a chartered accountant as a career, you can make a lot of money. But why did you choose full-time trading compared to your compared to your career in as a CA?
Yeah. See, actually, if you see a chartered accountant, many people know it is the toughest course in India. Okay, chartered accountancy is the toughest course in India. But many people achieved it. Even some of my friends also achieved it by following only called as a discipline. Okay, discipline is the most important thing in CA, because even if you see the CA curriculum, also we should get only 40 to 50% to clear the exam. If you follow the disciplined approach, you can easily achieve the CA course. And even we also seen the failures. Okay, CA will also teach you some failures, like we also pass in second or third attempts, like that. So it will take some time to clear, and it will also teach us failure. If you see the stock market also is the same way. Like we all know that maximum 5 to 10% only will make money, remaining will lose because of lack of discipline only. So if you follow any method, any strategy, in long run you can make money. But only difference is whenever we get some losses, okay, whenever we get some drawdown in that method, immediately we will change. Okay, we will change our discipline, or we will not follow our methods at that time. So that is how many people will lose money in the market. But I'm little bit of a disciplined guy. Okay, so whatever my method is there, or whatever any proper method is there which is working, even if it is not working for some point of time, I still believe and I still trade with a discipline. So I follow the discipline. So I thought that even the market is very challenging career, but if you follow the discipline, we can easily make money here also in market. So that is why I chosen stock market as a career. And one more thing I can say, because I'm just a 27-year-old guy now. So one more thing is, we should not come into full time trading. I am advising for all also. We should not come into full time trading unless and until we have some additional backup. Okay, unless and until we have some additional backup, because one thing I can always believe is scared money will not give you any money. Okay, will not generate any money, because whenever you are in pressure of making payments, okay, pressure of making your bills, your monthly bills, you will not make that money from trading. So whenever you want to come to trading as a full-time career, you should have some backup. Okay, you should definitely have some backup. So without that, I will not even encourage any person to come into the trading. So here, as a chartered accountant, I have my practice. Okay, my partners will take care of my practice, and my family, my parents, they are also well established. So I didn't have any uh, burden on me. I mean, any financial burden on me from starting days also. So that's why I taken this risk, because I qualified my CA at the age of 22 only. So I still have 3 to 4 years of time to take some risk. Okay, to take some risk to modify my career or to follow my passion. So that is why I choose trading, but it worked. So these opportunities and all, I utilized them. So it worked. Actually, my risk, whatever I have taken, it has. That's what I can say at this point.
Okay, amazing, amazing advice
Yeah.
for the beginners who want to start trading. So I have one
Yes, yes. And I think
question I had that
what
I
I
just want.
personally the most
Yeah,
was the risk management part where
yeah, yeah.
you know you're going to
Right.
talk about how have a backup plan at least. That's very
Yes,
Yeah,
yes.
important.
yeah. At least see, you should never. Yeah, because even in Twitter also many people may post some profits and everything. See, profit everybody will get, loss also everybody will get, and we all know that trading is very difficult way to make money. But if you follow any one single process consistently, definitely it will give. But you should not have that pressure of making money. So, for example, if you have a capital of 10 lakh, you should leave it 10 lakh to work. So it will work. But if you give some pressure to it, it will not work. So we make so many mistakes in pressure. That's what I'm trying to say. So whenever month end is coming, you should make some payments like rent, electricity, or anything. So you should keep that pressure for trading. Means that will not give you any work. Even for my employees, also we never pressurize them, because if I pressurize them, they will do so many mistakes. That's what I believe. So at least whenever any person want to come as full time trading, you should definitely have some backup plan. Okay, if there is no backup plan, it is very hard to do full time trading, because nowadays there is so many of opportunities you can do trade even with having other occupation also, like other job also. Many people are trading nowadays. It is easily manageable because of the technology we have now. So don't rush into full-time trading without having any backup plan. That's what I can say here as a risk management thing.
Okay, wonderful, wonderful. So, Vamsi, I had a question. Like, you are mostly into option selling, right? And you were into full-time options since last 2, 3 years, and you tried option buying before that. So,
Yes.
have you been into futures trade or like do you invest in
Yeah. So actually, I started my trading career with option buying. Maybe first index option buying and then stock option buying. Then I also taken futures also. But one thing I understand in all these three things, like option buying or futures or anything called as a directional trading, what happens there is you should always be right. Okay, for example, right now, let's say ICICI Bank is trading at 700 rupees. If I know that it is going upside from 700 to 720, let's say, so if I know that it is going upside, I should buy in a future. Okay, or I should buy some option, some call option, so that I will make money. But what if I go wrong? Okay, what if I go wrong? Or what if ICICI Bank is just staying in the same price for 10 to 15 days? So I will not make money. So whenever I do directional trading, okay, whenever I do directional trading, whether option buying or futures or anything, I should always be right to make money. Okay, I should always be right, and that stock or instrument, whatever I am taking, it should move in my expectation. So then only I will make money. Okay, that is the one of the biggest disadvantage in directional. But whenever it comes to non-direction trading, even though ICICI Bank is staying there only, I can sell some put option there. So as the time is moving forward, that put option will give me some money. Actually, as a human, okay, as a human mentality, whenever you are entering a trade, okay, whenever you are entering a trade, you should be in an impression that the trade should give me profit, even if it is giving little bit loss. But we had some kind of analysis, right? We will change the analysis according to our position. So, for example, if any chart is there in ICICI Bank chart is there, and let us assume I have bought ICICI Bank in my account, I will always watch that chart based on my buy position. many humans will do, because we humans, we never want to go wrong. Okay, that is a human nature. So we never want to go wrong. So if I having ICICI Bank position in my account, I always watch the chart to buy upside. I mean, to show them, to show the chart as a bullish chart. The same way, if I'm having ICICI Bank as a short position, I always look into the chart to find any bearish things. Okay, so whenever we take a direction trade, okay, whenever we take a direction trade, definitely, whenever our weave is right, we make very lot of money. But whenever our weave is wrong, or even our weave, I mean, even it is not moving as expected, we will not make money. So one point I can say here is, if you're trading direction, you should always be right to make money. But in non-direction, if I know that Axis Bank is going to 700 to 720, I will sell 750 call option, like another 30 points above. I will also sell 680 or 690 put option. So even though ICICI Bank is staying here, or even if it moves to my expectation, or even if it is going down, I still have a chance to make profit. Okay, so in non-direction, even though your weave is not right, even though it is not going as you were expected, still there is a chance of making money. And the human nature of you should always be right here. At least it will support to some point. So I always treat trading as a psychology way only, mostly. So for our thoughts, especially for my thoughts, non-direction trading will suit me, because I don't want to be right all the time. Okay, that I can say, because in direction sometimes what happens is there will be supports, like we always see, like S1, S2, S3. There are three supports on a daily basis. Every indicator, every chart will show us. So whenever we buy any stock or any instrument, we will keep our stop loss at S1. Then if our stop loss comes, then we will remove SL order and we keep our stop loss to S2, because it is going down, so it may recover. One thought we will have. Then again, when it comes to S2, we will remove our stop loss to S3. So like that, we keep on increasing our losses. Whenever it comes to profit, we close very fast. So that thing will keep on happening in direction, especially for me also in earlier days. So I left direction trading, because I don't want to be right all the time. I know that I'm not right all the time. So I'm preferring more into non-direction, because you have time as an advantage. Okay, and the main advantage is, even you are not wrong, or even you are not correct in your opinion, there's still a chance that you can make money in non-direction trading. That's why I'm doing most into option selling.
Okay, wonderful. So you're saying like in option selling, so there is a theta factor, so that the
Correct,
premiums
correct.
decay a
Yes.
lot fast while moving forward. So that will give you profits
Advantage.
moving.
Yes. Yes.
Yeah, yeah, advantage. So like I have one question. Like an option, many people don't do option selling because it requires higher margins. So like, can you
Correct.
tell like how do you manage, like initially how did you manage when you started your, just you completed your CA, like how did you manage the initial capital, and who are starting the trading journey? So how would you advise
Yes.
to start option selling for them?
Yeah. Okay. So what happened is, after I qualified as a chartered accountant in 2016, early 2016, I got a job immediately, and I worked in job for almost 2 years time. That's a very good paying job. Then I got some savings of around 10 lakhs in 2 years time. Then only I started building my option positions slowly. Okay, but even at the time, also in 2017, also I tried little bit other methods. But option selling, if you see in 2017, there is a huge leverage. Okay, in 2017 and 2018, even to 2019, also these 3 years, we do have huge leverage. If you want to sell one pair straddle, if you want to sell one pair straddle at the time, all we need is around 60 to 80,000 rupees. Without now we buy hedges and we reduce the margin. But at those times, if I want to sell any straddle or straddle, it will just require only 60,000 to 70,000 max. And even the premiums also presently today, for next week, for John 6th expiry, we are having a premium of 820 rupees in Bank Nifty. But at the time, the straddle is having a premium of maximum 400 to 500. Even weekly, whenever it is introduced, weekly options, the premium is very less. Premium is very less and movement also very less. If you sell 400 points, that is like a OTM at the point of time in 2017, 2018, when weekly options got introduced very recently in 2017 only they are introduced. At the time, 400,
Yes.
500 points also, yeah, 400, 500 points is a OTM. I will be getting for 40, 50 rupees at 400 points distance, but these days I am getting 200 to 30 points on Friday in a distance of 400 points. So I started my trading journey with a capital of 10 lakhs in beginning. So slowly in 2018 and 19, slowly I kept on adding some additional money and I with the profits. But I never withdrawn any much profit. Only 25% of the profit only I keep on withdrawing on any quarterly basis. Okay, only on a quarterly basis. So I developed. But for any beginner, I can say if you want to try any option selling, it's always better to have at least 5 lakh rupees capital to start with. And I see many people who take huge leverage, okay, by buying hedges or anything nowadays also. But I can say one thing: even if you trade only 3 days, like Tuesday, Wednesday, Thursday, then also we can make decent money. But don't take more leverage. I presently I will sell one lot of triangle or straddle for almost 2 lakhs capital or 3 lakhs capital. So less than that I will not even take because you know about the global events these days. Every day there is a new news are coming. So it's better not to over leverage. Okay, maybe that is why SEBI also has not listened anyone and has increased the margin to huge. Okay, so that may also benefit us from not getting huge losses in overnight. Because in 2018, I still remember in 2018 February, whenever market is crashed like around 5-6% in the February month, many people lost in overnight only due to the high leverages those days.
Right. Great.
Yeah.
So, listeners and participants, if you have any questions for to Vamshi, you can DM to me. You can send a message to me. I will ask those questions in the end of this session. Now let's move to the one of the interesting part. I'm super excited to know one of the strategy from Vamshi. What he do, what he does in option non-directional trading. This is a topic for the day: non-directional option strategy. So Vamshi, let's make it two part. What
Yeah.
you do for weekly and what you do for monthly. Let's focus on the weekly strategy. Can you please share one weekly non-directional option selling strategy with rules which you deployed in the live?
Okay. Okay. Sure.
Like how you decide the range for this? Obviously this may be straddle or strangle, right? So how you
Yeah.
decide the range and how you take the position, when you take the position, those position, and what premium and what strike price? Can you give some brief
Sure.
on this?
Sure. I will give. Yeah. So uh, non-direction trading. So non-direction means okay. Non-direction is not like we will just come into the system and sell one strangle or straddle. Because if you want to place any order, you should know something. Okay, so non-direction trading is nothing but where market will not go. Okay, here in non-direction trading, here we will also see direction, but the direction what we see is where market will not go. Okay, see instead of saying tomorrow Friday. So now we closed at 17,200. Now we closed at 17,200. Instead of saying tomorrow Friday, market will open at 17,250, okay, or 17,150. Okay, instead of saying any one kind of word like tomorrow market will open exactly at 17,250, and some person will say tomorrow market will open at 17,150. But instead of saying only one way, if I say market will open at 17,100 or 17,300 in this range. If I say this range, my probability of success will increase a little bit because the range is 200 points. So here what I want to say is whenever you increase the range, okay, whenever you say some okay, whenever you expect something in some range, then your probability of success will increase. Okay, a simple example that whenever IPL match is happening, okay, you can't guess a proper score. Okay, let's say if RCB is playing tomorrow, if RCB is playing today, and you can't say that they will score 120 runs today. Okay, but you can easily say they may score 100 to 140. So whenever you are increasing that range, your chances of getting success is more. So that is how we do non-direction. So what we do is, instead of guessing where market is going, okay, I just prepare some range, okay, from this point to this point. So how to decide these 2 points? Okay, here what I will use is, from last 2 years I'm using only this thing. Okay, I just plot only two lines, which is called as a previous week high and previous week low. Okay, I just follow only these two methods: previous week high and previous week low. And this previous week high or previous week are calendar weeks, like Monday to Friday. It is not expiry like Friday to Thursday. I follow calendar weeks. Calendar week high and calendar week low. For example, present week. Present whatever we completed is 27th to 31st. 27th to 31st is present week. So for this trading, for this week trading, I will plot previous week high and previous week low. Previous week high means 20th December to 24th, whatever happened high and low of the Nifty range. I will plot them in my screen. Okay, I will plot them in my screen. So I will feel that if market is staying in this range, in the previous week high to previous week low, that is a non-direction traders market. Like that is a straddles and strangles market. What happened in this week? Okay, this week, if you see, there is no much volatility. Market has traded in a very small range because market has not reached previous week high or not reached previous week low. Okay, so I always believe, why uh, why I will take previous week high and previous week low is, many people, okay, almost 60 to 70% of volume in the market will come in positional trading. Okay, very low people, very less people will do intraday trading in our business. I mean, if you see entire money which is circulated in the FNO statement, so total position will be in positional only, because you see the open interest, right? In open interest, every time the positions build up, even in night also. So those are all the positional options. Many positional traders, okay, they will keep their stop losses at previous week highs or previous week lows. That is a normal simple technical analysis thing. They will follow like higher high or lower low or something. For example, if I'm buying any stock or any index today, I will keep today's low as a stop loss. I mean, I will keep this week today's low as a stop loss for intraday. But if I'm doing the positional trading, I will keep this week low as a stop loss. Like that, many people will keep the same stop losses. So whenever we see the previous week high to get breached, or whenever we see the previous week low to get breached, so many stop loss orders will trigger in the system. So huge fall will happen. You can even analyze from the next weeks also. You can observe that. So whenever we are breaking previous week high or previous week low, the movement will be very much faster, especially in index, especially bank nifty also. The movement will be very much faster, and also with and also with rising in VIX, because people will fear. So for example, let me tell you one more thing. Right now, today market has traded in a range of 70,200 to 250 maximum. Even we traded today in yesterday's range only. That is why VIX is not increased. Okay, VIX is flat today, because yesterday already we have traded in this range. So today we will not get fear. But tomorrow, if we trade below 17,000 or any other levels, then definitely we will get fear. I mean, market will get fear, because that we are trading in some new range. So whenever we trade in the range, okay, in the same range which we already traded, market will not get fear. So VIX also will not increase. VIX is nothing but a fear. So when VIX will increases, whenever we are breaching previous week high or previous week low, then only India VIX will increase. Okay, this point also you can observe from tomorrow. Okay, whenever we breach this 2 point only, even there is one myth that VIX will increase only when market is falling. That is not correct. Even when market is going upside, if tomorrow suddenly if market will cross 17,300, which is previous week high, if we cross, definitely option premium will not fall. Okay, like what happened on Monday. Monday, if you see, Monday market went almost 1,000 points upside from down. Still, premium has not fallen on Monday because whenever you trade in some new range, the market will have some fear. Whenever fear is there, option prices will increase, but it will not decrease. So even when market is increasing, definitely the VIX will also increase, but it should at least breach previous week high to do that scenario. Okay, so for my non-direction trading, first thing I will do is every weekend I will note these two lines, previous week high and previous week low. I will always see my break even above previous week high and below previous week. So that is how I design my strategies. For example, any point of time, if market is breaching previous week high, then I will trade little direction. I mean, I will cap my risk in the upside. Okay, upside wherever it is going, because I know that once it broke previous week high, I know that it will go further up. Create my strategies, break even above previous week high and below previous week low. Whenever market is coming to this extent, upside or downside, then only I should get fear, because then only market will move one direction. Then what I do is, if market is coming near to previous week high, then I will hedge my position to upside, or I will limit my risk in the upside. Whenever market is coming near to previous week low, then immediately I will hedge my position in the downside, or I will limit my risk in the downside. So this is my broader plan. Okay, this is my broader plan. Okay, this is my broader plan which we construct before taking in a fresh trade. So 1 minute. So I will just rejoin.
Yes, Vamshi, no problem. Manas, have you connected?
I think he's connecting back.
Yeah,
I think
Manas is there, right? Or
is
Sakal is there.
connected.
Yeah.
Even-
So is
Yeah,
it
I'm
fine
there.
now?
I'm there.
Yeah. Is it fine now?
Yeah, okay. Let's go. You can go ahead. Go ahead.
Yeah. Yeah. Okay. Okay. Fine.
Yes,
Okay.
Vamshi, go ahead.
So I'm starting. Yeah. I'm starting. So here, this is my broader plan, like previous week high and previous week low, and we will have a range. So here, I want to discuss about one new topic in non-direction trading. Instead of selling a normal triangle or straddle, what I do is, okay, I will tell you one new method here. So it is about a combination of futures and options. So it is about a combination of futures and options in non-direction trading. So what I will do is, my trade will be constructed like this. So I will sell one lot future. Okay, I will sell one lot future, and I will sell two lot put options. Two lot put options. So here, this is nothing but selling a straddle. Okay, so here I will explain. For example, if I'm selling a naked straddle, okay, if I'm selling a naked straddle, right now, market is at 35,000. Right now, market is at 35,000. So if I sell naked straddle, I am getting around 825 rupees premium. So call is trading at 510 rupees. Put is trading at 325 rupees. So 825 rupees I will be getting as a premium. For suppose, if tomorrow market will open gap down of 300 or 400 points, like 1% gap down, I will be losing at least 80 points. at least 80 points, or even I will lose 100 to 120 points also in this straddle if I go naked for tomorrow. Okay, that is the one of the biggest disadvantage if you do in a non-direction trading. If you see any gaps is happening, whether gap down or whether gap up, so you will face huge losses at open. Okay, so what I to get less losses or to safeguard from gaps, what I do is I will sell one lot future, I will sell two lot put option. So let me tell you why I am doing this. Okay, so if you are if you see the future, presently future is trading at 35,300 rupees. Presently future is trading at 35,300, which is almost 230 rupees premium. Okay, which is trading at 230 rupees premium. Then if you see the put option, here if you see the put option is trading at 325 rupees. Put option is trading at 325 rupees. We all know that put option, whenever you sell an ATM put option, it will go to zero. Okay, it will go to zero because it is having a purely time value, and it will go to zero by expiry date. So here what I do is I will sell two lot of put options. So 325 into 2. So I will be getting 650 rupees credit. Okay, this total 650 rupees credit is time value. For example, if market is staying here only, 35,000 only for next 3 days, I will be getting this 650 will go to at least 200 to 300. So that we know. So here, what I construct my trade is I will sell one lot future 35,300 current market price. I will sell two lot ATM at the money put options at 325 rupees into 2. So I will sell 650 rupees credit. So technically speaking, if tomorrow market goes down by 400 or 500 points, this one lot of future will set off one lot of put option. Only one lot put option will be naked. Okay, only one lot of put option will be naked. Even that one lot also will give loss only after 650 points down, because we already collected 650 points time value. I already collected. So only after market is going down of 650 points, then only I will get loss. But if you sell a normal straddle, you are starting to get loss for even 300 points move also. But whenever you do this kind of trade, okay, this is also payoff and everything like a straddle, because we sell time value of only 700 rupees. So downside I am safe for 700 and upside I am safe for 700. That is a normal straddle kind of. But the best advantage study you for gaps. Even gap down or gap up also will not cause you big damage. Okay, so here what I do for this method, okay, that I will do only two kinds of adjustment. The first adjustment is whenever I always try to stay with ATM, because whenever we stay with ATM, if market stays there for some time, definitely you get very decent decay, because everything is a time value there. So you get very fast decay in ATMs. So here is right now I constructed my trade. Let us assume I constructed my trade with 35,000 sell 100 put options sell at 325 into 2 lot. So this is my trade construction. This is almost the payoff is everything like a straddle only, like a V shape straddle only. So what I will do is whatever I sold the option at 325 rupees. So everything is a time value. 325 into 2, total 650 is a time value for me. So as long as market is not going 650 points down, I will not make any losses. Even MTM loss also will be very less in this trade. That is why I follow, because I trade with huge quantity. So for me, MTM loss will be always will be a danger for doing naked trades. So that's why I do this more. So my MTM will be in control. Okay, so what happens is if tomorrow, even if I get like 400 points gap down or 500 points gap down, this future will support me very much well. Okay, we all know future, the delta of future is always 1. Okay, but if you do normal straddle, the delta of call option will be 0.5. So here, whenever I do with delta of 1, so that will support me very much well in gap downs. So what I do is for this trade, okay, I do only two kinds of adjustment. First one is if market is going upside. Okay, if market is going upside, let's say market moves 300 points upside. So my future will be at 35,600. So I will be losing 300 rupees in future. Okay, I will be losing 300 rupees in future. And in put option, whichever is trading at 325 rupees will fall at least to 200 rupees. So 100 rupees, 125 rupees will fall, and I'm having a two lot, so I will be getting at least 250 to 270 points. So even if market moves 300 point upside, I will be at cost to cost or in a small loss. So what I do is, if market is moving 300 point upside, then I will close this put option whatever I sold earlier, and I will take fresh put option there. Okay, fresh ATM like 35,600 put option I will take. So I will close 35,300, which has become a OTM from ATM. Then I will sell 35,600 put option. So this is how I manage in the upside. So for every 300 points movement, I will keep on rolling up my put to the upside, so that I will not be in any much losses. Okay, because for 300 point movement, easily your put option will support you for the upside. So there won't be any loss when market is going upside. Now, whenever market is going down, again the same thing. Whenever market is going down, as we know, I sold 650 rupees time value, so I will not be any trouble till 650 points. But what I do is, I will wait for this 325 rupees option to become double. When it becomes 650, okay, when it becomes 650, then my MTM will start giving me loss. So whenever this option will become 650, whenever this option, this put option will become double, then definitely I start getting loss. So what I do is, whenever it will become double, I will exit and I will book loss in the put option. Then I will sell fresh AT. So as long as put option is not becoming double in the downside, my loss will not be there. Okay, I will not be in the loss. Okay, and I will not shift the put option. So as long as market is trading in this range of downside 700 points and upside 700 points, we make very decent money in this trade. So here, when I will enter is, I will enter on Friday. I mean tomorrow. Okay, Friday or even today also we can enter. But I will enter on fresh because today expiry I will complete in this week, and tomorrow fresh trade I will take. Tomorrow 9:20 a.m. I will take the entry. Okay, tomorrow 9:20 or 10 o'clock. Okay, let's say 10 o'clock. Once market is settled, I will take tomorrow fresh. Okay, what I will do is, I will sell my future. Okay, I will sell future John month future, and I will sell two lot ATM present week. Two lot ATM present week. Present week means January 6th. So Jan 6th I will sell. After selling, after constructing trade, I have a break even of 700 points downside. Market is trading in this range, I make very decent money. Okay, here I will target for 200 points per week. So in this trade, I will target for 5,000 rupees per lot. I will target. So every week you can able to make 5,000 rupees in this trade, but once or twice it may give losses. Okay, once or twice it may give losses, because if market moves like one day 1200 point upside, one day 1200 point downside, like a trending day, whenever a big trending day is there, definitely then we will lose. So I will follow stop loss at 5,000 rupees only, because I am keeping target as 5,000. So I am keeping stop loss at 5,000. Once my stop loss will hit, I will close it. I will take fresh trade. Okay, so the rules are very simple. It is a basic straddle only, but if you follow this method, it will be very better than straddle, very much better than straddle, especially for gaps. So what I am doing is, I will sell future, I will sell 2 lot put option. Okay, I will sell future, I will sell 2 lot put option. If whenever market is going upside, okay, whenever market is going upside, then I will roll up put option for 300 points move. Whenever market is going downside, I will not roll up for 300 points move, but I will wait for put option to become double. Then only I will roll. I will roll down put option. So this is simple way. Even if you see right now, the spot is trading at 35,060. Spot is closed at 35,060, and future is at 35,300. Okay, so we still having 240 rupees premium. This we know that on expiry day in January, both will become same. Like even future also will come to 35,060. So still we are having 240 rupees premium. That will also help you if you short the future. So this is the one of the best intraday method which we are doing live with all my participants, with all my people. For almost like 1 year, 1.5 year, we are doing the same method. It is giving very decent success, and it will also safeguarding us from gaps. Where gap up or gap down will also safeguard. This will also give us losses, but comparingly, the loss is very much less. Whenever you do 10 times of this trade, hardly 1 or 2 will fail. Remaining 8 to 9 will get success. So I will be repeating one more time. Very simple strategy. This is nothing but a straddle only. So what I am doing, instead of selling call option, okay, straddle what to do, one call option, put option on ATM. I'm doing the same. I'm ATM put option, but instead of selling call option, I'm ATM put option. Okay, that is the only change I'm doing. Why? Because if market is opening gap down, this call option will not support you, because you have seen many times, or we have seen many times, when put option will go up very fast, but call option will stay as it is. But future will always move like spot. Okay, because the delta is 1, future will always move like the spot. Okay, so I always follow this method. It is way far better than straddle, but the same payoff and everything is same as a straddle, but only thing is the strike change. Okay, instead of taking call option, we are selling a future. That's it.
Great.
Yeah.
Vamsi,
If you are having any doubts, if anyone, any of the listeners is having any doubts on this topic, I am very interested to explain further
yeah,
in this topic. Yeah.
yeah, we are running out of time actually.
Okay. Okay.
And some of the questions I got in DM, but you have answered those questions very well already. So I am not asking again. And are you using the same strategy for monthly option selling also, right?
Yeah. See, for monthly, I will use a very simple. Like I start my monthly trade with a distance of 3,000 points from spot. Okay,
Okay.
so I will explain in just 5 minutes for my monthly strategy. Monthly
Yeah.
strategy, what I do is, see, I always note down. Okay, for monthly, what we do is, whenever last week of a previous month. So, for suppose this December 30th. So this is a last week. Okay, this is a last week. So in this time, we will enter in the next month option. Okay, like next month is January month, January 27th expiry. We will take entry. So what we do is, I will take 3,000 points away. So right now the spot is trading at 35,000. Present spot is trading at 35,000. So I will sell 32,000 put and 38,000 call. I will not disturb the trade for 1,000 points movement in the spot. See, technically speaking, if I'm selling 3,000 points away, there is no risk for me. For 3,000 points is nothing but 8 to 10% of the movement. Okay, 8 to 10% of the movement in the bank nifty spot. So there is nothing that to fear if you do with this much distance. So what I do is, as I am already having a space of 8 to 10%, I will give market to move for 3%. 3% means 1,000 points. So even if market comes to 34,000, or even if market comes to 36,000, I will not disturb this trade, because as long as market is moving up, down, up, down, up, down, then the day will be much faster. So allow the market for some time, like first 1 week or 2 weeks, I will allow the market to move in this distance. But once the market is moving a little bit more, like 1200 points or 1300 points, then one side will start me giving the losses. So what I do is, at the time, any one of option like 32,000 or 38,000, either put option or call option, will decay by 50% premium. So let's say I'm selling at 100 rupees 32,000 put and 100 rupees 38,000 call. I will wait any of the option to go to 50 rupees, like 50% decay. Only then I will shift. Only then I will rotate the option or rotate the call option based on the movement. But I will wait any of the option to become 50%, okay, to decay for 50%. Once the decay happens, I will book profit. I will book profit in that strike. I will sell one more strike. I will sell one more strike with a premium of at least 70% of losing side. So I will just give you in a simple example. So let's say right now Bank Nifty is trading at 35,000. So I will sell 32,000 put at 100 rupees. I will sell 38,000 call at 100 rupees. Okay. Now let's say market move to 36,200. Then this 38,000 call may be trading somewhere at 150 rupees. Okay, 150 rupees. My 32,000 put came to 50. So I will book my profit put. Then for next strike, which premium I will sell is already in my losing side. This 38,000 call I am losing. Here the premium is 150. So this 150 into 70%. Okay, 15 7 105. So I will sell a premium a strike where the premium is trading at 105. So I will match around 70%. See here, I am not matching 100%. Why? Because as market moved 1,500 points up, suddenly if it reverses, okay, if I match 100%, and suddenly if it reverses, so whatever adjustment I have done, that will give me loss. Okay, so that is why I never match 100% of my premium anytime apart from intraday. Even for intraday trading also, I will not match 100% because we should give market for some space to come back. Okay, so whenever I match 70%, if suddenly market come reverse, then this 105 may go to 120, and this 150, which is present loss, that will also come to 120, and they both will match. So this is what the adjustment I do for monthly, and here I will aim for at least some 200 to 300 points in monthly trade target. Okay, this is a simple method we do in monthly, but in weekly we do with like a future and option trade. But when it comes to monthly, we do proper strangle with a distance of 10% spot and slowly come to near based on the spot movement. Okay, and the most of the decay will happen in monthly is a first week, and then third and fourth week only. Second week the decay will not happen. So next week you can expect very good decay in Jan month options, and next is Jan third and fourth weeks.
Great. Vamshi, I think we should have one more hour of time to discuss with you. You have a lot of knowledge and you're sharing a lot of information to our listeners. It's a great thing, actually. We'll have one more session. Maybe
Yes.
today we are running out of time. I think
Okay,
Shankar,
sure.
Yes.
you can summarize and we can close up today's F&O
I, ca-
podcast.
I think we I think we really enjoyed, Vamsi, whatever you said, and especially for a beginner, it may really make sense to understand the strategy. You also gave us a very good
Thank
line of checking out on the weekly levels, so which actually is the real support resistance levels compared to,
correct.
of course, we have to look at the OI build up as well, which you guided us. So that's amazing and looks very less of profits compared to option buying, but definitely more stable and consistent. And that's what we learned from you today. Thank you, Vamsi, for your time. I think we should do one spaces once again in the coming time, like Peter said. And
Sure,
thank
sure,
you,
sure. Yeah, we'll do it. Yeah.
thank you, Peter, for your quizzing and hosting Manas, the lovely questioning. and our host, Harsh. Thanks a lot to all the audience who has joined today, even when we are very close to a new year. Uh, many people are actually out on vacation, and many people are out working. But you took your time and came and joined the spaces. Hats off to you. Thank you everyone for your time, and have a great happy new year in advance.
Thank you, everyone. Thank
And
you,
may
Shankar. Happy New Year to you also. Vamshi, thank
yes,
you, and Happy New Year to you
Yeah,
also.
thank you,
everyone.
thank
Thanks
you.
everyone for
Thanks,
attending this
Shankar.
session. Yeah,
Thanks,
Bye.
Vamshi, for the wonderful session. Happy New Year to you all.
yeah, thanks.